Hey, what up? It's Lex. It is Thursday, July 16th. In today's video, I want to go over my midweek recap of all the plays and trades I've been doing. I'm having a great week. I've been crushing all the earnings plays. Starting with today, AMD. Here's the daily chart. I'm sorry, the intraday chart. It beat earnings, crushed earnings actually, in yesterday in after hours. And so basically, my strategy with these earnings, I've been doing call options on the long side, obviously, and I've just been following the basic pattern of waiting for the earnings report to come out and then buying it. I mean, it's not that hard to do. I'm just going long because they're reporting good earnings and people are buying the stock. So what I went ahead and did is I waited, and I've been doing this pattern all past 2 weeks. Waiting for earnings to come out, waiting for the first dip, and then buying that dip. So when it dipped down here around 9:58, I went ahead and bought 10 contracts. And I've been using RobinHood as my broker for options. And I just started using this 2 weeks ago, RobinHood. I've been using RobinHood for 2.5 years, but I started just using it for options trading 2 weeks ago because there's no commissions. So you can, I love it. You can just buy two contracts, another two, and just kind of pyramid your trade, as it goes up, without having to pay $5-6 per commission like you would have to do in Thinkorswim. So buying 5 contracts would probably cost me maybe $20-30. In Thinkorswim, it's costing me zero in Robinhood. So I funded Robinhood with just $100 2 weeks ago, and I'm now at $1,110. So in the past week, you can see here I've made $856, 333% in the past 4 days. So I've grown this account to like a 10-bagger basically so far, and I'm using the same exact pattern on all these trades, just buying, going long, call options out of the money, maybe one tier out of the money strike price, and buying it on the first dip at market open. And usually swing trading it for a day, or some of these have been day trades like AMD today. I got in and got out literally in an hour and a half. I made a quick $200. And if we look here on my spreadsheet, starting on the 23rd, I started with the tech sector ETFs, and just because Google posted a huge earnings win, they crushed earnings, so I went ahead and bought it at market open on the first dip, and I went long 3 calls. I sold those. I made 181% on those, about $160 profit. Nothing crazy, but you got to understand that this is very little risk. I'm only putting down $70-80, and I'm doubling it. No risk, no commissions either. That was the first ETF sector I bought, the tech sector, XLK. I went again and bought PayPal ahead of its earnings after there was a huge stake from Daniel Loeb. Third Point, he put in $800 million in PayPal because he thought it was going to go up ahead of earnings. So I bought the news. I bought the news and sold the news that same day, and I crushed that with a 38% gain, just $91. But this is adding up as the week goes on. The next one was Verizon. Another earnings winner. I waited for the earnings to come out. They crushed the earnings. I started the position with 5 contracts, and I added 1 on a dip, and I added 1 when it broke above the 30-minute opening range again. So I had 7 contracts long. I swung that overnight, made a nice 112% gain for $185, no commissions. Next day, Tuesday, actually same day, Tuesday, I went and bought the KRE ETF sector on regional banks. I actually took a small loss in that. I just got out of cut losses quick. It wasn't doing anything. Only lost 42. Tuesday afternoon, I went ahead and bought the financial ETF XLV. It's another spider because a lot of stock tickers in that ETF were breaking out on earnings, including Biogen, J&J. Bought that. I started out with just 3 contracts. Conservative at the, I think it was, what was the strike price on that XLV what I bought? It was at 88. That's right, 88. And 88, and so I got in. My average price for the call options was 55. I sold it at 118. Nice 114% gain, $189, no commissions. I went ahead and bought the XLK yesterday ahead of Facebook earnings, and this is where I went wrong. This is the first time I bought this based off of my thesis that Facebook was going to beat earnings. So I actually didn't stick to my plan this time of buying after earnings. Even though it wasn't Facebook, Facebook is heavily weighted in the XLK sector ETF. So I bought it, and it was at close, I was up about 80 bucks, maybe 30%. And then half hour later, Facebook came out. As you know, Facebook crashed on earnings. It absolutely got destroyed. It was down like 20%. Look at this chart. It was literally at 219 at close, and it just crashed to a low of 164. You're talking like 60 points. It's a lot for Facebook. And it dragged down the whole entire market, the whole entire NASDAQ index, the whole entire XLK ETF. So I had to wake up this morning and just sell it. You know, I cut losses quick. I'm like, well, I'm not going to stick around for this. It's probably going to get decimated at market open, which it did. So I took a little small hit, lost $87. That was my biggest loss since I opened my options trading on Robinhood, which was July 16th. These are my first 2 losses in 2 weeks, actually. No big deal. And then I came this morning and crushed the AMD, which I already went over. I am currently long PayPal again. After earnings, it actually had a decent earnings. It missed on revenue, but it beat EPS. So I bought the dip because I think PayPal's a great company, and all the analysts are coming out with buy ratings now. So I went ahead and bought the dip. If you look at the daily, you know, it was riding high off that 800 million stake by Daniel Loeb. It gapped down. I was like, this is going to be a good opportunity. I still think this is going to hit 90 by week's end tomorrow. I think shorts will cover, put options will cover. So I bought it. I'm actually back in the green now because it just hit 89, so that's good. So I was down maybe 50 bucks on this. I'm actually up now. If you look here, should be up. Let's see, PayPal. Yeah, I'm up $23 now. I got 2 contracts. Average cost 0.95 at a 90 strike price. So this is looking good. My other one I'm long on right now is the XLF banking sector. I think this will go higher towards Friday. I think I'm down on this, down like 10 bucks. This is only 5 contracts. Yeah, I'm at 5 contracts here. This expires next Friday, so I have a bunch of wiggle room. So with all these options that I've been trading, I am short term, meaning I'm usually buying on, if it's a Monday or Tuesday, I'm buying the expiration date of that Friday. So I'm buying all weekly call option contracts. For midweek buying, like Wednesday on, I'm buying the following Friday, which would be August 3rd expiration, because there is a theta decay as it gets closer to expiration dates. I'm not really worried about that because I'm buying these all on earnings. So I'm just buying and selling and trying to scalp maybe 100, 200%, which is a lot. So it's a little different than a lot of my other videos where I'm trading penny stocks. I just started getting into options trading about 2 months ago, and I've really kind of narrowed down my strategy, and it's been working like well beyond what I thought I could do with these options. So I'm going to continue doing this. And I've gone the other side as well. I've gone put options as well. But there's been so many great plays on the long side because it's been such a great earnings season for all the sectors. The only sector that's really getting hit right now is automotive, just because Tesla, Boeing, they're not doing good with in the media, and sentiment on Tesla is going down, so they're dragging down the sector. So, but yeah, it's been a great week. I still have 2 trading days left. I'm gonna look for some afternoon plays. On the week right now, I'm up $899, 349%. So I'm really excited about this. And if you're going to do options trading, I really highly recommend download Robinhood. It's awesome for options because there's no commissions. You can scale into your position size. I don't recommend it for penny stocks, just because penny stocks, there's a lot of volatility, and there's a lot of volatility after hours and pre-market. And the one bad thing about Robinhood is that you can't buy or sell in pre-market or after hours. So you're only trading normal market hours. That's why I like it for options, because options only trade during normal trading hours. So you're not going to get caught too much in volatility in the morning or in the after hours, like a penny stock where it will just, have some secondary offering and it will just like tank like 80%. So I feel a little more comfortable with this. That's not to say I won't trade options in my Thinkorswim, E-Trade, or Interactive Brokers, but it's just nice to have another broker that's it's simple, it's on your phone, you trade on your phone, as well as the desktop version now that you're looking at right here. And it's just, there's no commissions. So you're saving a lot of money. I mean, just if you look at all my trades here, I mean, I've done a ton of trades, probably only over 100 trades just in the past 2 weeks. If I was to do that in Thinkorswim, that would be, $500-$600 worth of commissions. So I'm saving about $500-$600 in the past 2 weeks just by trading out of Robinhood. So yeah, check out RobinHood.com. That's my video for the day. If you liked the video, please hit the like button, leave a comment or question. Also check out my other videos up here. I have a ton of videos. I'm going to start doing more as I've had more time for trading lately. But anyway, yeah, thanks for watching the video. Happy trading, stay safe, stay disciplined, and I'll talk to you guys soon.